Thanks, Christina. You're right, very excited to be presenting the opportunity of Titan Minerals, another company that is in Ecuador, and very much looking to, I guess, emulate the success of Lundin Gold and their Fruta del Norte operation, and also other peers in the audience, Sol Gold, and the discovery success that they've had with their Cascabel project in the north of Ecuador. So certainly Ecuador represents a massive opportunity in terms of a significant lack of exploration, a very immature in terms of a mining sense, but in geological prospectivity, I mean, for Ecuador, the Andean copper belt runs all the way through Chile, right through to the north into Colombia, and Ecuador represents a screaming gap and that opportunity, and that's what we are there to uncover, I guess. So just touching on our projects, we have 4 large-scale projects in the south of Ecuador, the Dynasty Gold project being our most advanced asset, and we've got 3.1 million ounces of gold and 22 million ounces of silver established in resources there. And then outside of that, our second most advanced asset is our Linderos copper project, and we were very pleased to have done a joint venture and earn-in agreement with Hancock Prospecting subsidiary company Hanrine late last year, whereby they are earning up to 80% of that project by spending up to $180 million Australian, by doing all of the drilling and development studies and reaching a decision to mine. So clearly shows, what they look to be a significant value in a project that, we'd done sort of 3,000 to 4,000 metres of drilling in that project. We demonstrated, good wide copper porphyry mineralisation there, and they can clearly see the value in that, and we're very keen to do the deal and get on and do the drilling. In fact, they're doing a 10,000 metre drilling campaign right now at that project. And so I will take you a little bit more further through the projects. But I guess, the other opportunity, like I said, for us, it's Ecuador. We found the government to be extremely supportive in Ecuador. They do see mining as a big part of their economic revitalisation. And we're seeing a number of incentives in terms of, low tax rates and fast permitting and the like in countries. So, certainly we also believe we've got the management and the technical capability in place to, I guess, advance and develop our projects. And there's a significant opportunity still to grow what we've already established in resources at Dynasty. So that 3 million ounces, we believe, could quite conceivably become 5+ million ounces of gold. A little bit on this corporate snapshot, I guess. Market capitalisation roughly around $110 million Australian. So you can see from, I guess, the resources that we have contained and delineated so far at Dynasty and the joint venture deal that we've, executed at Linderos, there's quite a disconnect there. But pleasingly, as you can see from, our trading, I guess we're seeing quite increased liquidity in recent months, and obviously the gold price is helping that. But I do feel that we're starting to see a little bit of that, the capital markets and the equity being somewhat redeployed from the majors, down to those developers, and emerging developers and explorers. So, I think we're really well positioned. We did quite a large funding late last year, a $20 million raise, of which we still have, the bulk of that at this point at the end of this quarter. Tribeca Funds being one of our major shareholders, owning close to 15% of our company as well. So, clearly well supported by a number of major shareholders, and some high nets that have been with us for several years now, and, certainly are very supportive of our strategy in Ecuador. So a bit more on the Dynasty project itself. Very large resource, clearly contained within a 9-kilometre long epithermal gold corridor. Mineralisation extends from surface. The low grade, or the component reported above 0.5 grams per tonne, is 3.1 million ounces of gold at 2.2 grams per tonne gold. And let's not forget the 22 million ounces of silver at a little over 15 grams per tonne silver, extending from surface down to a depth of about 350 metres. The bulk of that mineralisation is held within the top 100 metres, so more than half within the top 100 metres, and more than 80% within the top 200 metres. And of that, there's a high-grade component as well. 2 million ounces of that gold and 13 million ounces of that silver is, at a grade of 3.8 grams per tonne gold, 24 grams per tonne silver. So very high-grade resource extending from surface, and clearly, less than half has effectively been drilled, we believe. So a lot of opportunity to grow that resource both laterally and at depth, and that's currently what we're doing right now. We've got a 10,000 metre resource growth drilling campaign underway and targeting a resource update for mid this year. a little bit, I guess, more understanding of the resource distribution itself. You can see the graph on the left there shows the, I guess, the metal endowment, the gold and the silver and the distribution, and clearly, below that 200 metre mark, there's a real, I guess, low amount of resources, and that's largely a function of the lack of drilling, below that depth. The cross-section on the right there shows the, the epithermal gold vein-hosted mineralisation. And I guess the bulk of the resource has been drilled on an 80 by 80, in some areas 80 by 40, and down to a 40 by 40 in some areas. So we're sitting at close to 40% indicated and 60% inferred at this point in time. But what we do see from our infill drilling, where we do complete that, is that we tend to find more mineralisation within what we know. So we know with our resource conversion drilling, we will improve strip ratios and most likely improve grades and ounces within those areas as well. So good opportunity within what we know also. Some of our latest drilling results were returned just in the last few weeks. It's a little bit busy, that cross-section, but what I'm showing is current resources in that dashed black outline. We've got the indicated resources at the top, followed by the inferred below that. And new drilling intersections, more than 150 metres vertical below, which are intersecting, 5 metres at, 5.5 grams, within 17.5 metres at, 2.5 grams. So clearly a very well mineralised system that continues at depth, far below what we know. And I guess the opportunity for us to target more of that higher grade, really robust, wide mineralisation to, build out that resource inventory to that plus 5 million ounces, and to sustain what could be really quite a robust, long life, gold mine targeting, 150,000 ounce per annum production profile. But we won't put, a preface too much on what the mine could be, because I think, realistically there's a lot more discovery to be made through our exploration at the project. But we do like a little bit de-risking, and we do like to know that there's optionality when it comes to processing and mining an ore body. So I won't go into the detail too much on the metallurgy, but what I will just draw your attention to is that we're, I guess, achieving recoveries in the high 80% gold, 87% gold via a standard cyanide leach for the oxide component of the ore. And then when we get to the sulphide or the fresh component, we're getting low 90% recoveries, via, again, conventional, I guess, processes. And in this part of the world, Ron from London didn't sort of touch on too much detail, but effectively what they're doing with their ore body is, crushing it, grinding it, floating it, producing a concentrate and selling that concentrate. So we have that option available to us, or we also have the option of further processing that concentrate on site to produce, doré bars, if we choose to go that way as well. So I guess the point is optionality and really high recoveries being achieved either way we go. So at Dynasty, although we call it the Dynasty Gold Project, there are a number of copper porphyries that sit within the project as well. And as you can see from the image on the right, there's the Calaman porphyry to the southwestern corner, the Kohler porphyry effectively in the middle of that epithermal gold corridor, and the Giselle porphyry off to the right-hand side or the eastern end of the project. And, again, pointing to Lundin and what they're doing at their Fruta del Norte project. And geologically, we know that epithermal gold deposits, the heat engine and the source of the mineralisation generally is those copper porphyries. So we know that they're in close proximity. We've been able to demonstrate that they're here effectively from surface. We've seen it in our soil geochemistry. We can see it in our mapping. The only thing we haven't done here is drill it yet. So once we've completed doing our resource growth drilling, which is focused on the gold at Dynasty, in the next month or 6 weeks, we'll be sending the drill rigs across to these copper porphyry targets and testing what the opportunity could be, to backfill the mine life at this project, or could really greatly, transform the economics or the focus for this project, because we can find a large-scale, copper porphyry here. That'll be a real game changer for this project as well. So moving on to the Linderos copper project, very pleased to have secured Hancock Prospecting as our partner. They've been very active in Ecuador for at least the last eight plus years in their own right. They have their own projects. They've invested in excess of $100 million US in their own projects in the north of Ecuador. They've also entered into other joint venture exploration agreements with INAMI, which is sort of the mining arm of the Ecuadorian government. So clearly they're very active in Ecuador, and clearly they have aspirations to be a large-scale copper miner in Ecuador. So they see the opportunity, and they're being very, I guess, proactive about that. So our, joint venture and earn-in deal with them comes as no surprise that they are actually being very proactive at getting on with it. So they've earned their first 5%. They've paid us $2 million, US $2 million in cash. They are partway through their 10,000 metre drilling campaign. We've got results coming from that very soon, and I believe they will complete that by probably May this year. And at that point, they will have earned 30% of that project, and then they will go into an additional 15,000 metres of drilling to then get to 51%. And I think they'll probably do that by the end of 25 or early 26. So it gives you a sense of their, I guess, ambitions to get on with things at Linderos. And I guess, we were able to do that deal because the technical capability of our team, the well-placed drilling that we had put into the Copper Ridge prospect at Linderos, which demonstrated grades and intersections of 308 metres at 0.4% copper equivalent, with some higher grade intervals of 0.5, 0.6% copper there. So copper mineralisation from surface, opportunity for higher grade mineralisation within that. A 1 kilometre footprint at surface defined by geochemistry and mapping. In fact, a 2 kilometre footprint defined by geophysics and an IP survey that we did in July last year. So all the hallmarks of a very large-scale copper porphyry system there. And clearly we are fully funded by Hancock and not having to pay anything until they reach their 80%. Copper Duke is another one of our copper projects. I won't spend too much time on it. I don't want to bamboozle you with our projects that we do have. But again, another large-scale copper porphyry project, 7 kilometre long porphyry alteration footprint, all the hallmarks of a Tier 1, global porphyry system as identified by the geochemistry, age dating, multiple fertile intrusions and mineralisation styles. And again, look, we intend to get out there to Copper Duke to test these drill targets in the second half of this year. Ecuador itself, look, I already touched on it, the government being very supportive. And look, they do see mining as a large part of revitalising their economy. Clearly mines like Lundin's Fruta del Norte are highly profitable. They are contributing significantly to the GDP of the country. So outside of Fruta del Norte and the Mirador copper mine, they are the only two commercially operated mines in Ecuador, so there's significant opportunity to obviously grow the GDP of Ecuador through mining. And then ESG and community is largely what it comes back to. So again, we've been active in country for a little over 4 years. We've had these projects since 2020, locked out due to COVID, really got on the ground in earnest from 2021 onwards. What we've been able to do is forge really strong relationships with the communities. The Dynasty project is 5 kilometres from the town of Salica. We've got a workforce of 5,000 people there. Everyone that we employ is local or within the local region. We only have one expat, and he's our exploration manager. He's Chilean, 20 plus years experience in the industry, really knows what needs to be done to, explore these projects to, for what we believe could be a major Tier 1 discovery. So we've got the right person leading the team over there. We've certainly got a young and enthusiastic team of geologists who are very passionate about what they're doing. In fact, the entire company is. So on to that. The board and myself, clearly, a lot of experience, a number of geologists, geophysicists, I'm a geologist myself, and Matt Carr picked up the projects or identified them at PDAC back in 2018, 2019. So a lot of capability amongst our board and management team. And I guess what we're working towards this year is delivering a number of milestones. So Dynasty is all about growth for us. It's all about achieving that 5 million ounces through, resource extensional drilling, but also testing some of our really exciting exploration targets. We're working towards a resource update mid this year, and dovetailing in some of those de-risking scoping studies, which we look to deliver at the end of this year. And then outside of that, the copper projects really is the blue sky opportunity for, I guess, our shareholders and our investors with the work that we're doing at those projects. And then the last slide just shows you a little bit about, I guess, what I believe to be our value proposition, and I guess the severe disconnect between our current market cap of about 100 million, 110 million Australian. You know, the EV for our gold resources is about $22 an ounce. No value given to our silver. You know, no value ascribed to the joint venture deal that we've done for Linderos or the blue sky opportunity at our Copper Duke project. And I guess, you know, we put the Dynasty resource out in July 2023, a very different price environment to what it is now. You know, gold's at all-time highs, $3,100 US an ounce now. So big disconnect, and I think, you know, things are starting to move now and a lot of inbound interest in what we're doing there, and a lot for us to deliver this year.